Mic check. Can you guys hear me?
Morning, boss.
Morning, morning, morning. All right, that means you can. Okay.
Good morning.
Hey, morning, morning, morning. Okay. So FOMC day. So typically the morning of FOMC days can be a little bit range bound and slow, but if we're trying to get 20 to 50 points, I don't think that should be an issue. But if anything looks unfriendly, and we're mature traders, we'll adjust. In the event that not a lot of opportunities present themselves, we will change this into a lecture instead of a live call, instead of a trading stuff. But okay, let's go. Same narrative, chop 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 inside here. Nothing has changed that. I still believe that we want to reach above here. For whatever reason, it's not yet there. Order block still showing up for work. Deep seek still doing deep seek stuff. But for all intents and purposes, I still believe the drawn liquidity is above this range high. Just pretty much waiting now and see. Let's go into the H1. No, sorry, wrong chart here. Before we jump into all of that, let's go into the H1. So let me hide this indicator for a second. You should be getting this today. Let me just check if Moan is here. I believe he is, but let me just confirm. Not yet here. So once I speak to Moan today, I'll have him essentially publish the code and then share it via link, all that fancy stuff. Or if Voodoo or John can get it done, we can do that as well. One of those guys. So into the analysis we go. We have this range that we had a bit off. We had looked at yesterday, and we were looking at this being the draw outside of this gray area, mainly the top being the drawn liquidity. So we had some buys inside here. I did not hold all the way. I don't know if anybody did, but I think I saw somebody with a really nice long setup. That narrative is still in play. From the H1, let's take a look at what we have in terms of key levels before we jump in. This is the old breakaway gap. We're now way above it. All right. This is the expansion lower. It starts right here. First FEG. Close above it. Gone. So the good book says if this is where your breakaway gap is and we have a close above it, your new range will start right after. So in this case, usually we have this big this candle here looking like this, and then we'd automatically start here. Most of the examples I've shared around this logic, you'll see me tagging a big FEG like this, and I'll using this low here as my drawn liquidity. In this case, we have the close all the way here. This is the start of the delivery. Okay, we don't have any runs below here as yet, so let's kind of tidy up the start a little bit. We don't need this. We don't need this. We don't need this. 8:35. Still lots of time. So I want this blue line to be here. This is the low of this delivery. If FOMC gets animated and for some reason sweeps lower, then I'll pay attention to looking for a setup here if I'm at my charts. If I'm not at my chart, then we have that big displacement. We have a down candle, then a displacement again. Your key level should be inside here. In a perfect world, reading from left to right, we have initial displacement, liquidity pool, we swept here and then we pump. Support narrative. I don't want to say order block. Support narrative right there. This is as deep as I'd look for it to go. Consecutive down close candles. Big push. The good book says your key level is going to be inside 8 p.m. So tag the open price at 8 p.m. Still there. That's your key level. Now, this and this would make more sense. Now we'll jump into the M5. I'll put a label on it. 8 p.m. Open. Fine. Leave it there. Now we can add our submission range. So reading submission range, we have initial open, big displacement, expands through the open here, breakaway gap. Breakaway gap is staying intact. Something interesting happened here. There's a big gap here. Then it runs. Everything I want to see from an M5 chart should be printed around this level here. There's not much we can deduce from an M5 besides this. This candle is similar to the one that we were trading yesterday. So for all intents and purposes, let's cover that body. There's your M5 order block. Let's jump into M1. Introduce a little bit of time theory. So my first objective long is to target these highs. Not these highs, these highs. Based on how this looks, I'm going to interpret it through a market maker model logic. So if I'm explaining away and you find your entry, kudos, but for the folks who not so quick. Market maker model logic here. We don't have a whole lot of runs on range lows inside here, right? We don't have a whole lot of them. So framing breakaway gaps here is pointless. We don't have an immediate run on sell side that we could use as a target and a reference point. Going all the way back over here, yes, we can look at 4 a.m. somewhere inside here, and then use this low after 4 a.m. Oopsie daisy. And now we have context for breakaway gap. So you're looking for the expansion that takes this low. Up candle, big push, breakaway gap. Retracement objective. This FEG, pointless. See? Pointless FEG. Once it's not the first or the second, I really don't care. Now we're moving into lower time frames now. Well, not lower time frames. The deliver down here. We have lots of expansions breaking new lows. Let's call these micros, not macros. Expansion, first FEG. I'm going to place a whole lot of importance on whether we close above here or not. But for right now, this should be the long setup that we're stalking. Why? Key level, hits it, entry fractal, we're long. You should be long. I'm not long though, but I'm going to be. So I'm going to try to frame my entry of this down candle right here and the next M1 candle. And something along the lines of this for best case scenario. So here we go. Nice and easy.
Had a wild night with hedgehogs and brownies.
Hey, you know, I haven't seen it yet. Still haven't seen Sonic.
I think we need those sweaters.
Oh, this is lovely. I just joined and we're in the same buy.
Say less, say less, say less. So, yes, the entry looks good. Yes, the logic sounds solid, but we need confirmation of direction. So, again, I'm placing a whole lot of importance on price getting back above here.
Yo,
Hola.
what a go on?
All is well, all is well.
Seeing. There.
Let's see what's in the chat. Jesus with a entry much lower than us. Oh, yeah, that wasn't a that to me only message. Okay, no problem. Keeping my focus here since my invalidation level is so far away. I don't want to see this candle here get violated. Not interested in a FOMC chop. Not interested in a slow delivery. Not interested in staying all morning either. But like I said, if for any reason it doesn't feel as nice as I want, I'll just make it into a lecture.
It doesn't move now. I'm closing.
I'm watching here first.
Yep.
Can't be afraid of candles like that, man. But managing the risk is fine. There's no issues with that.
It's not afraid. It's we tap down into the high probability failure swing, and below that down candle, the rejection block. We're not moving now. For me, that means that we're coming back to take the low again.
Let's see.
Nobody cares about equities open anymore.
Like, man, tap master.
Hey, Kish, good morning.
Hola.
Just a quick question on the structure here. So I'm watching here. Are you considering this the rejection of that level and then the order block will print somewhere in here?
Correct.
Am I not correct?
Correct.
Okay.
I'm liking it because it hit the level already. So I'm not afraid of whatever this is that it's doing.
Fucking I am.
All right, taking too long here. Probabilities start getting less, in my opinion. Shouldn't be here this long, especially since the order block already prints. So I'm gonna manually cut this and then wait. Probably would have stopped me up anyway. Let me check. Let me check. Okay. Yep. Bot saying the same thing. Bot saying should long here.
Let's go, Nemo. You can do it.
Probably just mismanaged the stop I wanted on this, but nonetheless, since this is the order block, I'm going to reframe my entry around. Can we get a close above that 50% level?
Oh shit.
Bot is saying the same thing. Bot is saying the closest drawn liquidity is all the way up here, which is the same breakaway gap that we found.
What's your bottom box derived from? I missed it.
This one
What's your
here,
bot? Yeah,
I think it's the M5 order block
sitting inside the
here.
sitting inside the rejection block on the hourly.
Yeah.
I got lucky.
What do you mean?
Move my stop to because we tapped down into 50% of the wick. Rather than close, I move my stop to just below this candle.
I closed in this very candle. Like this candle, I closed in it when it was going almost there.
Yeah, I said I was gonna do the same thing, but then I knew I'd end up mad if it turns around again.
Oh, no. The drawn liquidity is way more than 50 points.
Yeah.
I just needed to show willingness to get back above this candle's 50%. I'll buy again.
Ooh.
But for now, I don't want to chase it and feel like I took a loss. I have to make it back. Confirmation direction and then I'll
Kish,
play.
are you framing any type of efficiency of like this range that's being created down here?
No. Everything here is being framed around the 8 p.m. open price, the
Yeah, okay.
M5 order block, and then what we're getting right now. It needs to get back above here.
Still not convinced.
Think
Okay.
about the edge low.
No, I never I never
Think
factor in
about
Asian
the
low.
edge low again. Okay, it's not far away.
Just like yesterday, right?
Yeah.
Let's see. New
Kish,
H1 candle coming in.
good morning, Kish. Just a
Hey.
question. If this confirms direction, why are we entering earlier than that?
I want the expansion through it.
Ah, okay. So you're anticipating the change.
Yes.
And like, if I can just clarify one more time, Kish, so key level, because of our barricade,
Mhm.
you're considering this, the rejection down in there,
Mhm.
reject away. So the order block should be in this leg of price here.
This is the one that I want to use because this is the first one that prints. If some,
Okay.
yeah, so look at this. This is the level, left to right. Yes, we could understand or frame logic around this, but this is the first thing that printed there. So you have to reference that.
But
That's
isn't it
why-
rejection then order block?
Huh?
Isn't it rejection of that level and then print the structure?
Yeah, but so it's okay. If we did not get above this down candle high after rejecting, then I would solidly support the logic of entering here or
Okay.
even here. But because it already went above it, then this one has to be the one.
I see. And you're just going to use it as a reclaim.
Right. So as of this point, since we're above that level, when the next down candle opens, I want to be a buyer.
Like Zoom.
Yes. And now in a perfect world, let me say this, in a perfect world, once we go long in the next candle, I want an FEG here. So I'm long here. Once we go long here, I want FEGs right here. So the first thing you're looking for is expansion and close above this so that the breakaway gap can print in conjunction with the order block, then this, and I'm super happy. As of right now, I'm good. If it allows me, I'll build positions.
I'm willing to go in again after 7 minutes.
Yeah. So what I'm trying to communicate for the last 2 weeks is the narrative, how you find and stick to the narrative. You've seen instances where the entry is just right out of Jump Street. You've seen instances where the level gets reclaimed, but the narrative and what we want for that narrative to be in play is way more important than the entry. Especially in a case like this when the TP is so far away. So let's put this here now. This right here is what we want. M1 closure above that. In fact, it probably looks very wiki here, which is good for support. Probably at least one person overthinking it.
Kish, top G.
Hey, what's up?
You not worried about equities open?
Why?
Volatility.
FOMC. As usual, anytime equities open is close by, and you are close to the previous H1 low, the only thing that you could not be worried about is potentially new H1 sweeping the other H1 and then moving. But you don't want to guess those. You want to have a rules-based approach. This here gave me everything I want. Reclaiming the level. We're still there. This is the next thing I want. Once we close above here, wreck this, and then I don't care about equities open. Should just be a smooth run.
Okay.
Yeah.
So
Always
as,
rules. Never emotions. Always rules.
so as I'm reading this, so this candle, we shouldn't see 50% of it broken then, right?
Exactly.
Essentially.
A couple of minutes ago, you saw me hover over here. I wanted to tell you to trail your stop. But because we haven't gotten the break, I don't want to have you micromanage the trade because I'm not micromanaging mine.
So the FEG that pops up here is our bag.
That's the plan. Bag plus a break above here should give you IOFED setup. Not far enough. Would have much liked it to be way higher, but FEG is a FEG. No FEG yet, but we got that close. Next objective is wrecking this. As it trades into there, the human thing to do is to watch what happens at that 50%. If it's rejecting or wicking 50%, manage the trade at that point. Not before, not after. Manage the trade the moment it starts showing evidence that it wants to reject that 50% level.
Can I ask why? Well, I think I know the answer. Why that FEG holds more importance to you than the one just below it?
Why this one holds more than this?
Yes.
We're left to right, baby, left to right.
I knew that was going to be the answer.
Yeah. So we got that close still, manage a trade, remove the risk. Now we want this to be a breakaway gap, right? So that tells you you don't want this candle to be retracing here.
Uh-oh.
There we go. So now, next thing again is to get that close above here. The human thing to do again is to manage a trade as if it's trying to reject the high of that. If you're fine with 20, you could close here. If not, take the risk off the table.
This M5 is looking like it won't give me a second chance to get in again.
Well, not in this candle. Your second chance shouldn't be in this candle. This
No,
is the
no,
candle
I'm
that has
saying,
to close to make the FEG valid.
no, I was saying the way how this M5 is closing, it's looking like it's not going to give me a second chance. That's what I was saying.
Oh, M5. All right, sorry.
Yeah.
Oh, yeah. That looks big.
That's another time frame, Kish.
Yeah. I don't only trade M1. I trade M5 too.
Remember, Kish, not all of us understand the different minute intervals.
I didn't even use any of that for this. Because my plan was if the delivery wasn't nice enough to trade, or we're just not getting a smooth play, we're going to go into having a conversation, either about time or about just the general theme of the month.
It looks pretty unfavorable. Maybe we should just start that discussion.
Yeah, let's do that.
I second that. That's
What time is it?
It's just too easy, bro. Like it's insane to me when you just sit down and spell this out.
Yeah, I really
But-
appreciate just the narrative of how you're walking through these reclaimed. Like these last calls have been so valuable, like so great.
What candles should hold, what candles should
Mhm.
stand. 50% of this
Because I
candle.
think so. I try to say this a lot. I don't know if it's a I don't know if it's for free, or I don't know if it's because it's for free. People don't take it seriously. But for the guys who've been known me, remember those times when I used to just chalk out 1v1s, like 5, 6, 7 1v1s a day? That was coke stuff. That was taking a toll on me, right? But nowadays, what I try to stress is don't suffer in silence. If something is happening with you and you have access to me like this, and just reach out, send me a message. But be human about it. You know,
Silence of the lambs.
be human about it. Don't think you're going to message me at 8 o'clock and I'm going to reply at 8 o'clock and 2 seconds. That's not realistic. You're setting yourself up for failure. But send me a message and then I will get back to you. I have messages I'm replying to months later because I don't know, life happens. But when I can see what most persons are struggling with, then lectures like this happen. This January is because a whole other person in December were telling me the same things. They could read logic, but they were reading logic with nothing behind it, like no reason why that logic should hold. So I said to myself, I don't know how to fix this. And being the Christian at heart, you just pray. How do I help these guys? And as usual, you just dream up the solution. The solution comes to you in a dream. You need to talk about narrative. And I shared earlier in the month that we're going to just make January psychology a narrative. So all the calls so far have been narrative and psychology. And that's why I made these live calls public. Because I started doing it public to say, these are the things from technical perspective that we like to look for as technical traders, that we should fully understand to implement them. But in saying something and it looks good in hindsight is one thing. A couple of persons catching a trade with it, that's another thing. Walking through the narrative in real time, that makes more sense to me.
I'm
Did
gonna take the
anybody
credit and
add?
say I manifested this to happen. So the law of attraction does work.
Fish, would you add here?
Yo,
And if I'm going to add, it's going to be a rejection of the breakaway gap or rejection CSD business card model type of logic.
Oh, not even the second FEG.
Where are you going to put your stop if you go along here?
Yeah, true. I mean, I did have a stop.
No, I'm not entering here and putting my stop all the way down here. Not me. It would have to be first consideration below the bag.
Yeah.
Yeah.
I was gonna say.
Why? Why chase it when I'm fine at break even right here? As you should be as well.
Life's fun. Life's short, man.
That's how we friends, man. That's how we friends.
I want 8 more pips than I'm out on this account.
Mert must have rode a lot of roller coasters.
Yeah.
But that was Mon. That was
Mon.
Mon.
That's what I meant. Mert's like, what is he talking about?
I'm like Mohan, You don't say you enjoy hearing me, but I love when I hear Mohan on a call. I don't know why.
Oh my God.
That's a nice 50 from the first entry, huh?
Morning, Tyler.
No. Tyler. No,
you know what I'm talking about, yeah?
I know what you're talking about, yes. But 30 for everybody else.
Do I mark it?
No need. I know exactly what you're talking about.
Oh. No fun.
It's not that, but
Send me the
before
DM.
I encourage certain type of trading, I need to make sure that the basics are done.
Too aggressive, right?
Right. So I'm going to share my entry. There's my realistic entry. There we go. And that's all.
Me like a donut. Didn't have my chart.
Everything about that entry makes sense.
Nah, man. Trust this.
Partial break even. Yeah. I'll give this. I'm considering if I should start the lecture now, or the person's still managing this trade.
I am, but start the lecture, man.
I'm gravy now. I'm break even.
I'm pretty sure everyone is break even by now if they're not in.
No one using stuff.
Let's go with lecture, mate. We're ready.
Yeah, man. Everyone should
Okay.
be. No.
So
You're gonna give me a chance by retracing, cheeky bugger. Sorry, let me shut up.
If you are watching, right, let me just say this before we jump in. If you are watching, and for whatever reason you're not at break even, which would be weird, you're watching this. Just watch this. As long as we're not trying to get above here, you should be fine. Get below here, you should be fine. If it wants to hold inside here, it's a FOMC morning. Choppy deliveries are likely. Bare bones analysis says that we should want to reach for this high. My little friend says I should want to see this get traded to. I'm not entertaining, entering on retracements here with this below me because it's just too far away. Too much, like all of this overlapping confluence. I can't support an entry here. That's just me, right? And my rules. So, I spoke to 2 or 3 persons yesterday, and I hope they sent me a DM reminding me because I told them to, so that we could have a conversation this morning, but I'm not seeing it. So here's the thing. This lecture, the purpose of this lecture is to get some of the building blocks back to the front of everybody's attention. Okay. That playlist yesterday, I shared it because if you're new to TCM, you would have missed all those developmental lectures. They're not precision oriented. They're just like these, a narrative for you to understand the process. Okay. To supplement that, here are the guidelines that I would recommend to a brand new trader. Number 1, trading is not about buying green candles or selling black candles in this case, or buying bull candles or selling down candles. It's about understanding the processes that are printing. The time frame is irrelevant at the moment. Understanding the processes that are printing and the different elements inside those functions or processes. For the persons who are a little bit more advanced, let me add this. Every higher time frame is a process. Inside those higher time frames are smaller functions that get done to make the big picture look the way that it should. For you, your growth point is going to be understanding that, hey, the higher time frame process is, let's say, reaching for highs. So on a lower time frame, the functions that can print are going to be running short-term lows, obvious CSDs, printing bullish structures, rebalancing ranges, and then making new highs. That simple. We're not going to complicate it. We're not going to go into time yet. We're not going to do anything. Every higher time frame is a process, and that process prints when smaller functions are in alignment. We seek to identify what that larger process is. For example, the market reach above this high. That's a process. In getting that process done, then there are a couple of things that it needs to do. Since the process is reached above high, aka bullish, we expect some low to be run to show that there's offset accumulation. Right? They're running below sell side to buy. Offset accumulation. Then you're gonna have some type of displacement, classic technical stuff. Those are easy to see. We don't care about those. We care about understanding the processes that should print. Offset accumulation, you have to understand that. What is that? It is when liquidity is accumulated outside a range. Offset accumulation happens when liquidity is accumulated outside a range. In bullish environments, offset accumulation happens below a low. Simple. You don't want to buy offset accumulation. That's jumping the gun. You want evidence that offset accumulation is taking place, and then you look for where it's reaching for. Okay? It just ran that low. It accumulated. How do I know? There are order blocks down there. There are bullish CSD structures down there. Since it just accumulated at the lows in sell side liquidity, however you want to call it, the next thing it should do is show me that there's a shift. It's no longer accumulating, it's now displacing. For the market maker model fans, it's the same narrative of looking at offset accumulation as a smart money reversal. That's why you generally don't get in on the smart money reversal unless you have a level identified. For today's call, it was 8 p.m. open, right? That's where offset accumulation happened. But knowing that it happens in one of two forms, it's never anything but a rejection block or an order block, nothing else. There's no FEG in offset accumulation in the process itself. How it prints on a chart, that could happen, but you're not going to give importance to the FEG if it's happening in offset accumulation. So let me say that again. I don't want to confuse anybody. That's not the intent. In a bullish narrative, when the market reaches into a level, that level could be a low, an open price. Offset accumulation is going to print in either an order block or a rejection block. You want nothing else. Once those print by themselves, they mean nothing because they're going to print just as candlesticks. You want confirmation that there's a CSD. That's when you start looking at FEGs. Notice I didn't say anything about entering in this FEG. I didn't say anything about entering in this FEG. I didn't mention the absence of FEGs in here because that's irrelevant. What's important is that level right there, 8 p.m. open. It got there here, it got there here, it got there here. Why didn't I not try to frame an order block down here? Because none of these levels, none of these candles close below the level. And by definition, if we're going to print an order block, it must accumulate the liquidity. So it has to close below the low. And that's why when you're bullish, you cannot fear down candles that close a little bit beyond their level because it's supposed to do that. You don't want it for risk purposes, but it's supposed to look like that. You can't accumulate this low and not put a body below it, in my humble opinion. Okay? None of these are closing below 8 p.m. open. I feel like I should probably look at the futures chart just to support my claim, but I'll just leave it there and then you can do that on your own. Since none of these are closing below the levels, it means I don't need to frame an order block down here. So as you can see, I did not mention this. This is for experience. As an experienced trader, when you know that some things are going to be here, you could participate here. And that's why when Tyler was saying 50 points from that low, I didn't shut him down, but I don't want to have you focusing on this here just because it's an entry and not knowing why. Tyler, I'm pretty sure, knows why you want to enter there. This is what I pulled your attention to. This is the logic. This FEG, irrelevant for entries. This FEG has nothing to do with your entry. All your entries focus around this. So, left to right, here. Why not this? You could use this as well. But this is being paired with this. So either of these you use, don't feel like you need to justify that this is the one and then this printed inside it. And then you went long here and your stop is here, so you didn't get the stop out as me. That's individuality. So leave that alone. We're focused on this. The moment we go above, close above the open price, I buy. I don't need to wait for, and you shouldn't either, the high to get taken here because the narrative is already there. It trade through, I exited, or probably would have stopped me. I don't know. We exited the trade here. It does not mean you switch your bias and you start thinking this plays through here. No, you start looking at, if this process is going to take place, these are the elements that should print next. It should try to get back above here. So it's almost like a fractal that started like this. This is the beginning of the trading day. Down candle, run above, here, good. If you can look at this, and we're saying the FEGs here have nothing to do with the entry criteria. If you're going to look at the FEGs that print here, you're looking at them for efficiency. So that means if we, let's say we didn't find this order block, we just started, we came here and the market started to move. And we recognize that it started rejecting this. So this is the delivery. When it's doing this, that's inefficient. You don't want to trust an entry here if it's inefficient. Wait for it to become efficient. When will it become efficient? When there's a green candle that's closing right above 839 closing price. After this, the range is efficient. You could track efficiency now by fibbing, finding 50%. So it keeps you out of trying to jump the gun or enter early or just buy. Once you have that efficiency narrative, 50% of the range comes into play. I'm probably going to have to break this up into more designated conversations so I don't run away with the conversation and it doesn't feel all disorganized. But once the range is efficient and you have narrative, you're saying, I want this market to go higher. The range is efficient. I want 50% to hold. I'm going to move this for a second. Just go body to body for simplicity. In inefficient ranges, the imbalances are more important than 50%. So you can't say you're going to buy here to fill the imbalance. You have to say, if the imbalance is filled, then I can buy, then I can do this. Imbalance gets filled here, you don't care about this FEG at all. That's not an entry criteria. 50% of the efficient range. Support should print here. It's very normal at the beginning to think that support narrative here means it must wick this to the pip and then run away, because that's what we see on some screen recordings. That's not what it means. Support narrative means something bullish that you can recognize should print there. I don't know what you recognize, but I know what I've shared. So if you look at this and we say there should be a support narrative printed here, and you understand and recognize this, that's telling you that this entry is coming. But you don't need entry here, you need confirmation. Staying above 50%. With conviction, you enter here, you don't care. You're now demanding a certain level of delivery from price. Close above 50% since there's nothing left inside here. Get outside the range. When it's going to get outside the range, you want a breakaway gap to print. So you want an FEG to print that stays open. That's the logic. So that's why, while this was printing, and I'm using a completely different logic here, I was explaining why once we get above here, there's going to be a breakaway gap, or the FEG that prints here should be the breakaway gap. In real time, if this was a big candle, like this big, then you don't want that retracement to get back here, because then that tells you that the breakaway gap is not there. And that could be a choppy delivery or something else. We got this initially, we thought this was going to be the gap. It was very small and breakaway gaps tend to be bigger. So as we were watching this real time, it didn't give much confidence, but we liked the fact that it was closing above the level. then comes the breakaway gap. We no longer have to guess. We no longer have to wonder. We know exactly what FEG should stay open and what it means. In the real world, stuff happens. We're going into equities open. It could be wild. It could wick into here. It could put a candle there and then it moves again. Who cares? What we want to know is, under these rules, this is how we manage a trade. This is how we take money off the table. This is how we do this. Those are the things that are important. Not the perfect entries. Just the narrative around, why we should win this trade or why we shouldn't. So all of that here lends well to why, this is a very nice trade. Objectives have not yet been met. I'm at break even comfortable. I'm not worried about what's going to happen here, even if it slips me. If I see this setup print again, I would take it. It's the same logic. Once you understand that logic, that a higher time frame, don't look at it as a larger amount of time, and because it's a bigger time frame, when it's trending there, it makes more sense. No, because you've seen big up candles on a day, or big daily bullish candles followed by massive, daily candles right after it. It's about the fact that if this process on a higher time frame is going to be a big daily candle, this is what bullishness looks like on a lower time frame to make that big daily candle, up candle, mean something. That's why definitions are important. This is the FEG through the liquidity pool. For the longest while, most persons who understood how I framed market structure shift used to grab whatever FEG is at the low. And sometimes it would work and sometimes it wouldn't. And unfortunately, you guys didn't reach out to me and tell me that, hey, did you know that sometimes this doesn't work? And you probably told me rubbish. I figured out that persons were using this incorrectly when somebody shared a trade that they took that didn't work out. And I'm like, why that FEG though? It's the breakaway gap is up here. So definitions are important. In the expansion, it's not the biggest FEG. It's not any FEG. The first FEG, the very first one. That's the one that's important. Next one, very normal for retracement. If this gets there, no problem. It's a submission range high, I believe.
Huh?
No, I'm saying this here is submission range high, the blue line. This range here. No?
No, not that. Sorry.
This part?
No, what you were saying about sometimes not using the largest one, that spun me.
So,
yeah.
Most times, when I'm on live calls in the past, I would mark a FEG and I'd say this is where the retracement should be, or if it gets below here, this is what it means for direction. Most times on higher time frame, you don't have a whole lot of FEGs. It's usually just one big one, because most of the examples were shown around big FEGs. Partly on my part, the concept was miscommunicated that it should be the first FEG in the expansion. Because I'd shared a logic some time ago, probably a year, where I said that anytime you're looking for trade opportunities, the second FEG, focus on the second FEG.
Yeah.
If you go back, you know that's a fact. Anytime a lot of persons ask me that question, there's so many FEGs. How do you pick which one you want to look for the second FEG? Second FEG. Because the first one is going to change the narrative. If we expand lower and it retraces and it's stopping at the first one, up candle, take it slow, I'm selling that. That's normal. If it expands and then there's a breakaway gap and it's getting above that, I'm not selling that. So that's the difference between specifically outlining what your process is. When we talk about rules and processes and not pattern trading, this is what it means. Oh, I just saw him taking a trade and there was an FEG there and he looked for this in that FEG. Why that FEG? Because it was the one that, no, definition. Was there an expansion?
Sorry. I thought it was to do with commitment. So yeah, we typically use the first one if the market shows some commitment. But let's say for the purpose of this, let's say the first one was this one, just to get my example across. Then I wouldn't really be interested in that one. I'd focus on this one.
So that's a matter of preference and not a matter of rules.
Okay.
I'm pretty sure I heard it communicated somewhere, possibly by ICT, that if you're looking at order blocks in an area, you want the beefier bodied ones. So a direct derivative of that is if you're looking at FEGs, you want the bigger one. I understand that, it makes sense. And you could find a million examples where those work. But what about, how do you frame what happens when it does not work? Why? I lost this trade. I'm a consistently profitable trader. Why didn't I not see that coming? No idea. Because you're framing it around the wrong logic. So
And yeah, you spoke to me there, but okay.
So here's the thing. You want to start by accepting that if I'm going to be good at trading, I need to understand the processes that take place. You don't have to think about what are the processes. Is the market being delivered higher or is the market being delivered lower? Let's just stick to that for now. The processes we're focused on is the market being delivered higher or is the market being delivered lower? By the way, as we're trading into this FEG, going back into that old low, you want to trim here, okay? Don't be one of those persons.
Would you short because of the CSD happened just now?
No, I wouldn't.
I'm out of this.
I think you did. No, if I'm going to short anything like this out in the wilderness, it has to be time related.
But not even the fact that we're inside the M5 FEG below the 4 AM range.
I can't know all of that from here.
No, but this is your retracement FEG. We had up candle, CSD.
I think this is largely happening to chop around inside this range here because of FOMC plus it's almost equities open. That's what I think. I don't think this has nothing to do with a logic that's repeating. But I could be wrong. I could be wrong. I could be just stuck in my ways. I'm old. But right here, you don't want to get too excited for what can happen here. Just let this play out. We know what we want and we wait.
I'm out and done.
Yeah, you should be trimmed right once it trades into that. Yeah, that's what I was saying. Submission range highs right there, but I kind of missed. Maybe I missed saying that explicitly. Nonetheless, get used to the fact that the processes are the market being delivered higher or the market being delivered lower. When it's being delivered higher, these are the ways in which it prints. A lower time frame is going to sweep a low. One of these entry fractals are going to print. One of these mile markers in terms of FEGs are going to be there. We're going to show clear willingness to try to close above it or not. And then everything else will be there. So we never have to overthink. Okay? Once you're comfortable with that, then you want to start going into the smaller processes. That's where I'm probably going to come in. Time theory, M5 structure, these fractal logic, those are what you want to see on lower time frames to make all of this tying together. So like right now, let's use this right now. It is equities open. We're trading back inside this old breakaway gap. The first thing you want to see is, does it have willingness to close below this level or not? It doesn't mean that's your trade. It doesn't mean anything. You want to see that. Once that happens, then you start saying, if this, then that. Okay? It closes below here. If we're bullish and reaching for this, and it just closed below here, how can you frame what to do here? It's reaccumulating. Remember market maker logic. If this is your smart money reversal, and this is, I don't know what it's called again, something here, then this is the next thing.
Low risk entry.
Low risk entry, right? So now you can expect this to do one of two things: sweep and reclaim, or reject hard. If it rejects hard, direction is going to be framed around, can it get back above here with a body? Nothing more, nothing less. No overthinking, no trying to do anything. If this, then that.
Kish, can you look at the 4-hour chart, please?
Been a while, but I can. Let me get this.
Thank you. Thank you.
It's from the Church of ICT, Asia, H4.
What about H4?
Just wanted to look at
You just
it.
want
Yeah,
Someone
he's
beat me
just
to it.
checking.
Funny guy.
He's just checking.
Yeah, I don't think he has his laptop, so he needed you to look for him.
Oh, you're asking me what do I think based on what H4 is doing?
Yes. What do you think?
Okay,
That
let's take a
FEG,
look.
that BC,
Looks
that
good.
BC as a IOFED.
Let's take a look. This H4 candle started at 6 o'clock, which means it ends at 10 o'clock. We're 30 minutes away from 10 o'clock. We have order block. Failed to close above. Key level right here. Overlapping nicely. Security guard. Displacement. Breakaway gap. I don't see a reason for the H1, the H4 to want to get down there, because the breakaway gap is there. So if it's going lower, I would say it's going to reject the low at 2 p.m.
Okay,
But
thank you.
I don't expect that. I expect sweep. Sweep is done. Now reclaim. First evidence of reclaim, down candles will no longer want to close below previous down candles. Then for beefy bodied down candles, you're going to start seeing 50% of those candles being traded through. And then the highs come. And then once the highs come, then your key levels come into play.
Wouldn't you look at the breakaway gap here again?
Yep. But because we
Right.
read left to right, if this, then that.
And like this is a situation as well, like Kish, when we've like expanded through the low. I'm like referencing the efficient range that we just passed through. Because like the breakaway gap comes to mind, like Mohan just said, and like the second FEG would be the retracement objective. Because like if we can't fill this and we're returning into this efficient range over here, isn't that the continuation?
Wait, what?
Oh,
Yeah, yes. Say that again. Say that again.
If like, so we pushed through the efficient range that we were watching. Mohan brought up the bag, like for confirmation of like expansion ending. I brought up the second retracement FEG. So if we retrace back into this efficient range over here and we've displaced through it, if we can't close that second FEG, that's the entry for the short.
Right. That's it. Simple logic. But because we're bullish, I want you to look at it like this. Annotate.
Kish,
Hola.
as your low taken.
Yes. So there's the low. So we have key level here, and we have an efficient range below the key level. All right. Let's start by looking at that. The market ran the high of the efficient range, then it displaced through. For bearishness, we will not get above that. Not even for an entry lower. For bullishness, we will do this.
But then
Because,
again,
huh?
if we in that same logic, we were looking at this, we were looking at that, but you mentioned where would you place your stop, right? So in this same case, how would you place your stop? Can't be all the way here, right?
Below the
No,
reclaimed OB.
we'd allow the candles to print. So let's say, clear these off.
Because isn't this here, Kish, like not to like butt in, but this little like pullback that you're drawing on that right there, that's reclaiming the candle that closed this FEG on this side, correct?
Logically, so it's balanced.
Yeah.
So that's why I'm putting all the importance on that. Reading it from left to right, if a new delivery started at equities open, all right, let's be real about this. Right.
Why
here.
are you bullish? Sorry. Next question.
Why would you not want to be bullish here?
No. I'm asking you why. I'm not saying that you shouldn't be. I'm just curious as to what's making you bullish. But so ignore that question. You was gonna say something very good. I'm sorry for just blurting out.
No. So H1 from yesterday. Remember this H1 range. We're interested in seeing that run. That run was in play. If it's breaking down, I'm thinking retrace, expand, get to the objective.
Okay. So you're not necessarily saying you're immediately bullish, but you're bullish overall. So you're looking for delivery. I'm following.
So swept that range, you're looking for evidence of direction. You're not trying to stalk an entry here. If you try to stalk an entry here, you will get hurt. You will get hurt. And it's not going to be because you don't know what you're looking for. It's because it hasn't showed you anything yet. So if we start looking at just this portion, right? I'm going to tag the low at 932. I'm going to put all of this to the left. If this is the information that you have available, what would make this bullish for you? Just looking at it. Somebody's got 50% of this. Somebody's going to be here. Look at what this candle is doing now.
This is all we've got to look at.
This is all we have to look at right here.
Now it'll be the open of this candle.
Open of this candle. So if you're jumping the gun, you're trying to buy below the open of this candle. If you're not trying to jump the gun, you're waiting to see if this candle gets above here and then you buy a retracement. Okay? But that's just your entry. That's nothing but your entry, right? This delivery here, we open and it's just going lower. So your range, that's your range. Now think about every pattern that you've ever seen or heard of in trading that refers to bullish price action. Every single one of them, no exceptions. It's going to say that if you have a drop and it pulls back and it comes like this, you need a push through that high, maybe a close, then you buy retracements, right? No magic. This is saying it could reach for this, or this is saying it will reach for this high. What it does here is what is going to tell you whether this is going to go higher or not. We don't, at this point, we don't know. We're reading it like, you know, somebody who's watching statistics to do something. When it gets here, how it trades there, how the delivered prints on the retracement, that is what we're going to use to make a decision.
So
This
right
is not
now
offering
we
you
have
anything.
we don't have any confirmation, even if we
Right.
close above this.
Nothing. There's no confirmation right now.
What if we
So
close
you
above?
will only use the barricade logic when we take this high.
No, wait. All right. I'm not talking about every single trader that there is. I'm talking about what is classic understanding. For you, if we want this high to get traded through because we understand that it should, we can play early entries inside here to expect that. Just like this trade, we know that once it gets above here, it's going to push up. We entered below here. Remember when you asked that question?
Yep.
If this is here, why am I entering here? Because I'm expecting that. In this delivery here, I said if it's going down here, what I'm expecting is sweep and reclaim. It swept it. It hasn't reclaimed anything yet. Nothing has been reclaimed. So you don't have a bias here or anything that you're going to lean on and say, I'm going to do this because there's nothing here. And that's why, you see, remember, look at this big candle now. If you try to do anything here, you're getting hurt. And it's not because you don't know how to read price action. It's not because you can't trade. It's because this is not telling you that you should be doing something. This is purely your desire to participate in a market that you don't know what it's doing. Catching the knife, for lack of a better word.
So if we closed above here, that wouldn't mean anything to you.
Where? If we close above here, then I'd be interested in participating to accept risk.
No, here, the reclaim will be.
Nope.
Okay.
Hey,
this is not an interfractal.
Can I just clarify something with this like barricade and early entries? So like if this candle was our point of focus, this candle doesn't close above it. So buying the open of this secondary candle or buying below the open of that, that is an early entry confirmation to then close above here. But then once we do close above here, are you still looking for the retracement to the key level, or is now the barricade high our key level?
We're looking for the retracement. Remember, it's if this, then that. By itself, remember, I said maybe about 4 or 5 calls ago, I said that persons have way too much confidence in candlesticks by themselves.
Yeah, we're lacking narrative.
It's a big candle, so you just automatically think it means something. That logic is going to hurt a lot of persons. A lot of persons. We know it because we've all gotten hurt by using that logic.
Yeah.
What we're saying is, when you're looking at something, it's always a if this, then that approach. If this, then that. If we have 2 down candles and we close above its open price, then I can buy this. So so usually, like, take a look at all the other times that we have like played around with early entries. Every one of them is the same idea of reclaiming that level. It's not forcing it to work. This right now is not something you expect to work because you haven't closed above here yet. Closing above here is what makes this important. We haven't gotten that. That's why if you try to enter here before that, you get hurt. This is direction. If we close above here, then I can take risk to confirm direction.
Sorry, go ahead.
No, go ahead.
And okay, so this is like what I'm trying to get at though is, so if we were to close above here and it took the several candles, like just like this, like say this third candle closed up here, even on this retrace back to our key level, this is still accepting risk. And if it rejects, then our structure will print to go and define our direction up here.
Beautiful.
Okay.
That's what it is. That's exactly what it is.
Yeah. So David,
this is the aggressive entry. And then once the structure prints, that's the more confirmed entry to then go decide where we're going up here.
That's right.
Okay.
Just so if this was to close here, then this is the key level. Then let's say this is an order block that we would look for that, right?
That's it. But everything you want here must come from closing above here. So now watch how we print here. If we keep our eyes on that level, If it closes above and we retrace, we're going to see a setup print inside here between this black line and this blue line.
And it'll be on that.
It won't be on that.
Okay.
It will be on this open price.
But is this not our structure that like we've then like retraced and then rejected?
No, we're not. This is what you look at if you're trying to look for continuations. So let's say you're looking at this as the low. From 932, this is the low. We expanded through that low. If you're looking at it through that lens, then you say, we just had a run on the range low. I don't know if this is bullish or bearish, but if it's getting back above the FEG in the stop bount leg, then this is what it means. I'm framing this as a delivery. This is all of this right here is the delivery. So I'm not interested in looking at if it runs a low or not. I'm looking at how it reacts to the levels. This is the level that we watch. Jumping the gun and getting away with it is one thing, but replicating that logic is what we want.
Yeah.
But if we,
I think, sorry, carry on, Gentler.
So if we're here, let me get my annotate. If we're, here, let's say we're here, we're looking at this, which is the barricade. This is the key level. If we get this retracement here, like into this, and we're just accepting this as the OLR from here lower, printing the sell side inefficiency of the delivery. And then we've gotten the retracement and we close above, which confirms sell side delivery over, looking for continuation on the buy side. Our retracement technically doesn't need to come down to this key level because we've like out of order of operations retraced before expansion, or I mean, it's in order. We've done our retracement similar to how the DR can shuffle its orders, right? So we technically don't need to wait for this. What would be more interesting is referencing this as the start of delivery and then just using normal bullish structure that prints from here to catch an entry and understanding that retracements can go as deep as here.
And that's why I mentioned that once you get better at identifying your key levels, you don't need to know what is going to print. You just need to trust that something that you recognize will print there.
Right, yeah. Like you'll get a bag here because this is technically like, you just call it EO, wicked bag, just the whole thing. Anything can print there.
Right. So as this is trading higher, we don't know if this is going to fall out of bed. We don't know. We don't care at this point. I don't care at this point. What I care about is if it starts closing above here, I'm looking for an FEG right inside there. So whether it's going to be from a retracement, then a pump, and then the FEG, I don't know. How it prints is not my concern. If it prints, then I'm interested.
Yeah, that's the same way I was looking at it, like Gentler, because I'm thinking all of this is invisible to me until it gets back here. I just see this as a blank space. I'm just using this. Once you get there,
I used to wipe.
I was gonna say, yeah. This is when Kish draws this big white box and everybody goes, "What?"
I used to wipe them off because they confuse you.
Yeah. Because it's not doing what I expect. So when we get back to my level, then that's what I'll reference where my last area of interest was to confirm my direction. Yeah.
Solid. So for me,
reclaimed. Like this is how you dig into the reclaimed. Like when you're understanding the delivery, you know what level needs to be reclaimed to then like confirm the move is like taking place now.
That's it.
So Kish, you will only take a reference of this first two consecutive down candles closing, or if another one prints here, would you use that new one?
I'm not interested in it while it's down here. If I'm going to look at anything down here, I have to factor in time. I have to factor in what time it is.
So that means, your choice is a lot to do with this right here.
Where did you put the
blue line submission range?
Yes, I'm interested in that blue line. That blue
You
line
want to do the
right
chart
here.
first.
I'm way more interested in how price trades when it gets here than anything else, because I know what this means. Down here, it's more hoping that something plays out in your favor. I don't want to put money on this. I want to put money on this because I understand this. We could watch this and say, okay, this looks like the fractal. Let's say if it plays out. Yes,
I
it's
want
played.
money on that candle right there.
Yeah, we could do all of that. We could do all of that.
Mm-hmm.
Let's pull this up.
Actually, no. Let me leave it.
Kish, I have a question. I kind of joined a little bit late. Why start the range, the candle you selected to start our range? Is that because it was the failed expansion from that point on?
Nah, 2 minutes after equities open, 2 minutes after news release, 2 minutes after volatility drivers, same thing.
Okay.
2 not 6 now, huh?
What?
Because usually don't wait for the first 5-minute candle to close and then looking at the next.
That was when I was teaching you how to be responsible. Now we're going into time frame.
Irresponsible territory.
They don't know.
Speaking my language.
Some artists, which artists are the irresponsible tour? Oh, Kevin Hart thing.
Yeah.
Wait.
So that's what we're doing now.
Gotcha. Okay.
Right? We're interested in this range, this exact range right here. We're interested in.
And like we're sticking specifically to this because like, and you keep like, we know how to interpret this. Like we know like a logic path to put on when this is closed above and how to interact with it. When it's a large down candle like this, then a wick and another one, it's not as refined and clear, the process that we need to confirm our entry there, unless you're using some time.
That's right. That's what I'm saying. Time is the only reason why you'd be in this trade right now. Nothing else.
Yeah. That's clear.
For structure purposes, you're looking at the close above here, and you're looking at taking that high. And then we're going to reclaim everything that we've had before.
I had a question if you are at a pivot point. So I was appreciating what you were saying about offset accumulation and thinking about the market as like turning gears of functions and like which time frame is fulfilling which function to see how they all tie together. My question is, this makes sense, offset accumulation. I'm totally fine with that. You referenced this level as the efficient area. And so for me, as I think about that, that's like the moment where one function is shifting into the other, which is why you would reference that level. But I don't understand how you qualified that order block as the beginning of or that moment of accumulation, I guess we could say, as the beginning of the shift of the function.
Okay. If I said the structure that you want is going to get printed after we hit your key level, where would we already have our key level.
Yeah.
Once we hit our key level, then your structure is going to print.
Right.
Okay. The structure that we've been using for the last week or two has been 2 down close candles and an up candle shift through. Right?
Right, correct.
Right here, this will be the first time it hits. So that's why I was saying you can use that as well. This is the one that is more pronounced. Gets above it, entry, order block, gone. If you use this one, it's going to be the same logic. Until we get a close above here, your key level is going to be inside here. Right? This second candle right there.
Yeah, exactly.
There's nothing. Bam, we close right here. After we close above here, key level comes into mind. Arguably not like close enough entry. You'd have still been long here, but your stop would have probably been down here. And then same trade idea. So it's the same logic. It's just
So you're
not
just
sure
oh sorry.
what to say.
No,
Same
no,
logic.
it's fine. It's just I hadn't taken into you know, I try to be very diligent in the moments where you say we are starting a new delivery because it's great for efficiency reference. I hadn't considered that the price signature of the entry fractal is the tip of the hand that is kind of the new delivery. And so framing efficiency around even just something as simple as a repeating entry fractal at a key level can be a way to start framing efficiency.
Fair.
Is that logical?
That's logical. That's logical.
Is it
That's-
accurate though?
Yeah, that's something that you arrive at when you start doing the
Right.
same thing over and over. Let's say you start off making a cake and you only use regular milk. 2-3 years in, you develop an appetite for a different kind of milk. But you know that milk is used in your cake, so you substitute the milk. It's the same logic, it's the same cake, it's just a different ingredient.
Yeah.
Yeah. So this structure is pretty much asking me to buy it right now, if I'm being honest.
Yeah, I was just looking at that.
Because it's printing support narrative at the EQ of the range. I'm looking for a big push.
It's at that level that you marked yesterday. That said it was it yesterday? I think so. The start of the range or new delivery that we are playing in.
Oh, yeah. Yeah, this is asking me to buy it. I'm not going to tell everybody to buy it, but for the persons who are up for the risk, entertain the idea at the very least, or watch it, right? Or at the very least, watch it. Where's the
Gentler is our TCM Matthew McConaughey.
What?
Your voice sounds like him, man.
Uh-oh. It's because I'm tired.
probably not an ideal area for the stop loss, realistically, but we will see. 9:58. 2 minutes until the new H4 candle comes in for the guy who was mentioning H4 earlier.
Voodoo.
So let's get some fireworks then.
Oh, that was El Dente. I use H4 for other stuff.
Yeah.
Corruption.
Dente pasta man.
Do. Let me take a peek at timing because I actually want to buy this. I wanted to
New hour.
wanted to
rolling.
show me that it wants to move. For now, it just looks like it's just staying at the lows. Yeah.
10:03.
I can tell that the delivery is starting for a fact. I just needed to move so I can have some fun.
I have a question. Would you be worried about yesterday's inefficiency because we are in there, but we didn't completely build it, like even the wick?
What time frame?
5 minutes.
Oh, I haven't been very responsible in that sense, looking at 5-minute charts. Down here, you mean?
Yes.
I mean, off the bat, we had old high, close above, displacement, this low already taken. I'm not interested in that. Leave that. Leave. Let's leave that where it is and just go higher.
Okay.
All right, here's 10 o'clock. Pantsless candle for voodoo.
And like
Speaking my
Kish,
language.
like this is a situation where like, okay, they might sweep the low on the 8th candle, but in this situation, the OB here is created before the breakaway gap is going to show up, or like before we fill that. Like we fill this, but because we haven't filled it and we have all these down candles, that's when it's like we've already retraced FEG above, tap that OB open, and then like move quickly.
Yep.
Yeah. Thank you.
It's like I have so many weird references, but you understand them, so it's fine. Before anybody starts to offer goods and services, they usually have a location. Right? If a business place is coming to town, you know, they build a mall and then the shops go in the mall. The mall is already built here. They're just waiting to start offering goods and services. Pretty silly, but if you think about it a little bit.
And so like, I guess my question is like, and like, look, if I can just be honest, like I got in down here.
I know you got in.
But this technically is early entry before narrative confirmation. Yeah. And then like the best ad in this, close above our key level, then we have our location that the goods and services are being sold, tap that location, run. Because then at that point we have structure and then narrative is confirmed as well through this FEG and closing above that barricade.
That's it.
Yeah, that's the key part. Like that's what ties this all together. Because like if you just pattern trade all this, you're screwed. But like when you know how to tie in that narrative and then this barricade, wow, like it just kind of unfolds beautifully.
And that's the purpose of these calls.
Yeah,
and help you to see that part of it.
David's got them eyes.
David leveled up, boy.
I've been on the grind, R3.
I can see that. It's good, man. I respect it.
Send it.
Wait, I'm a bit confused though, Kish. You ain't looking at no higher time frame at all, bruv. Like, I mean, I see this buy only because we retraced back.
He's jumping through the matrix right now.
That's what I'm saying. Like, what? You said you're not trading time today, so how are you even? You got.
No, I'm not explaining via time. I'm not explaining via time. Time amplifies everything you know.
Oh.
It shouldn't be the place you start. And I know most persons think that once you get time, and no, you could still mess up time trading because you're looking at forcing a logic. I know the time it's supposed to happen, so I'm just gonna go in at that time and I'm gonna melt them up. No, that's not how it works.
Okay, so wait, when did you look to enter today then?
Huh?
Can I ask what candle you started looking at entering for this?
Trying to get me in trouble, man. You're trying to get me in trouble. But believe me, when
can I have a rough area there?
You guys aren't listening, man.
You lot, stop, man. What was you gonna say there, Kish?
I have time stuff that I'm going to share, but I'm not going to set you up for failure by just, telling you go stalk a particular time, and then you don't know what to look for. That doesn't help anybody.
R3,
Yeah.
there were no candles on his chart when he entered. He would just use time.
Oh my gosh.
Madness. Madness, Arthur, madness.
It is, but for some reason I believe it when it comes to you,
No. I share my trades with logic, so you understand.
No, I get that one.
Yeah. That's
So-
the point of doing this.
Can I ask? Does this theory have in relation to like the 84?
Wait, say that again?
Does this theory have any relation to the 84?
The 84 was born from this in my infancy. We have transcended 84.
Man said we. All right, sorry. No need to make you feel bad.
Super Saiyan mode.
No, because then I got because you know what? I can't ask you now, man. I'm gonna ask you something in message, bro. Because there's some stuff I was dabbling around it. No.
This guy is funny.
Don't be shy. Don't be shy.
No. It's not that. Here's what it is. If I ask him the right question, I'm gonna get an answer that's just gonna cause me more confusion. So I'm not doing it now.
Good.
Don't overwhelm yourself, bro.
Yeah.
It's there. You see it. Just give time to it. That's it.
Who said that? Tact, I already know you got it because you was flipping.
Bro, I'm being completely honest and transparent with you. I do not. I pick up very little things, and I don't make all the connections, man. Just being completely honest.
Hey.
All
When I
these
say
videos need to be rewatched. If things aren't making sense, all of this needs to be rewatched and notes need to be taken because
That's
he's
it.
dropping breadcrumbs in almost every
no. Who's saying things aren't making?
Trust me. So let me tell you this straight. My issue is my brain moves faster than my mouth, so I don't organize half the things I say. So if you pay attention, especially when I'm yapping away, you'll see that I reveal a whole lot.
That's what people gotta ask questions.
Yeah, you have to ask questions because I have to know what it is that you want to know so I can address it. Otherwise, you'll treat these calls as just signal service.
All right. So can I ask if the 12 and 6 still matters?
Not in this. Or not. It's not going to matter in what I'm going to teach you.
No, because that's what from the 84. That's something that I was kind of getting from it, but at that point, I was still struggling, having a couple struggles with reading.
All right, let me be clear.
Yeah.
When I thought I fully understood time theory, I made the 84. Okay.
But you realized you didn't.
But then I refined it as my understanding grew.
All right. You see the start times of the 84, yeah?
Mm-hmm. They're very, very close. They're very, very close, but they're not perfect.
That's what I was going to say. Close, but also it doesn't have to. Yeah, they're very, very close. Let's leave it at that. I was going to say it doesn't have to start right there, innit?
No.
Okay. And is there two different things that are overlapping, and then when they meet, everything gets gravy?
Yes.
See, there's a couple things in my notes I just haven't got right there. I had to leave it alone because I was getting a headache, man.
Don't worry. Like I'm trying so hard to share the information in a useful manner that I may end up making PowerPoints, or I may end up getting help from somebody who's a bit more organized than me.
Yeah.
Because what I want to teach you, man, you'll understand why Tyler is long all the way down here and Gentler is long all the way down there.
Can I say something quick?
They just said they don't know it.
They don't, but they understand. But
let me just say something real quick to R3. Bro, understand that you're like, all right, so I was in the same position you're in.
Yep.
Not too long ago, right?
Yep.
From my experience, and this is just a suggestion, right? Do what you will with this information, take it with a grain of salt. Take a break from it, right? Give your mental that break, because trying to like study for hours on end, cram it in every single day, like it's overloading your brain. You know what I mean? It's too much. So step away from it from a little bit. Appreciate what Kish is showing. I know you already do, but just, you know what I mean? And then go back, revisit it, pen and paper, and then you're gonna start to make connections that like, remember how when Kish first saw order submission and he was like, man, I went back in my journal years ago and made that connection. You're gonna do that, except with Kish's helping along the way, it's gonna be sped up if that statement kind of makes sense. You know what I mean? Give it a break and revisit it at a later time in the most recent videos, and you'll get it.
That with a grain of salt. I agree with that, and that's even though I didn't do that intentionally. I think that's exactly what I did, man. I left it alone and I just went back to price action. And you're right. Through doing that, certain things are
stalling here so much, man.
Yeah, Ron.
Right?
Yeah.
Archie.
Yo. for
You,
PC.
you're supposed to know what I mean. You get it now.
Yeah.
Because we've had that conversation. So you see now.
No,
Yeah.
I get you. Look, I get you. Look, I was just firing a couple questions out there. Let me stop. Sorry.
I mean,
And this is taking too
to
long.
add
This is,
on
this is starting to bore me.
to
I'm
add
not
on to
sure.
what Tyler said, I mean, everybody forgot about that first and second FVG, which was actually what Kish taught in the beginning.
Yeah.
Right. So just stick to the basics. Just as Tyler said, take a break, then come back.
No, 100%. 100%.
When he talks about certain things for like 4 videos straight, might be important.
That's
It's one way to
Just
look at it.
might.
To be honest, that's exactly what I was doing now because I was trying to study deliveries on the higher time frame, and it got to a point where it started to get on my nerves. I left it alone, and then when I started looking back at it again, you start to see things.
But yeah, if you guys have any questions, you could share them out now. I see there's a whole lot of messages in the chat. Oh Lord, David went long. Did you buy here, David? Like right there? No, not yet at that level.
Sorry, I was just managing. No, I just followed the process we talked about. The mall was already created, and then once we got like certification from the city that we can sell our goods and services, I just smashed right here.
It's coming right back for my entry.
I expect that.
I mean, you got to manage 20B, 30 partials.
Long managed, man. Long. Here's my chart. Here's my chart. I've been long managed.
Not only does he teach us, he looks down at his phone and trades sides while he's doing it.
Yeah, that's what's
Crazy
even
work.
fun.
Absolute madness.
That's the shit. I'm like, I can't even drink my tea and click a button at the same time.
Hey, that's his kids pressing the buttons, you know.
Yeah.
No, we do this for the money, right? We do this for the money.
100%.
We do this for the money.
He bought a Neuralink.
I am sharing so much in this call that you're just not paying attention to.
I'm paying
But
attention.
you will. You will. I bought this candle.
Where in that candle?
Look in the group.
No, I see that one. I see what you got down there. That was a scalp before narrative had shifted. Where did you say? Right here? Or
right here, this very candle.
As it was forming.
Oh, okay. I waited. Okay.
Same time yesterday.
Yep. Yeah.
Yeah.
I don't know what that.
It
I'm
can't
just
be.
saying I bought that one.
There's some killers in here, I'll tell you that.
Oh, man.
Oh man. But yeah.
But Jamaican wheat does.
Isn't it very interesting how the level that we said should support the narrative is being treated like this? No. Here's my note to you. The next time we put a low above here, this entire delivery gets animated. And I mean no longer staying inside ranges. I mean going. So if it puts a low above here and trades through that, it's going to wreck this low.
What'd you use as your reference? Oh, the original reference. Yeah.
Yeah, if it puts a low above here and it looks like a breakaway gap because it's far away from this, then it's gone. And then you can start pulling these back out in time.
Whoosh.
But yeah, it's pretty obvious that I trade time, but I show you the narrative that prints around it. So you don't have to trade time because it does more harm than good if you don't have these rules down. Trust me. Plus, you're not going to buy this candle after all of this drop unless you understand something. You're not going to do it. You might tell yourself that no, but until you understand why, you're not going to do it.
So Kish, like a question off this then. This was our narrative. We have our structure, but this was narrative. This means nothing as far as the change in narrative. Like our narrative has now been established. This is just like, would you consider this just an additional retrace now that narrative has been confirmed?
This is time distortion, for lack of a better word. If we have clear levels like this and it's staying between them like this, something is going on. Either somebody's speaking, some data is came out, something is going on like this. You don't get time deliveries that stall. Expansions don't stall. By definition, it runs. So that's what I'm saying. If I know this is my key level, like I know this is my key level. I'm waiting for a candle low to print above there.
And if that's our key level, this is meaningless then, correct?
No.
So key level for narrative, then retrace to pretty much like buy program is what we would call this.
Say that again?
Like narrative shift on our key level because of the barricade. But since we closed over the barricade, this is basically just like people dipping back under the barricade before security snaps them back out, correct?
Right. So the security, we just need, maybe the security left the post since we're using that logic.
Slipping in the back door. Okay.
Easy.
But yeah, for right now, once we get a low above here, this delivery is done. I don't know what they're doing, and I really don't care because I'm not going to stress or force or form fit something in here. If it's printing, then it should put a low there. This failed, and it came back. We got entries in here as well. It failed again. Okay. Have fun. You have fun, Nasdaq.
Is there a particular number of like failures that you'll permit?
None tends to be ideal. none tends to be pretty ideal, but from time to time, these things will happen. But one of the reasons why I don't mind this delivery is it's the morning of FOMC. FOMC is going to give you that push, that run. So history shows you that we generally have a choppy morning like this. So you come into the morning knowing that, okay, it's very likely to be choppy, but that does not mean I'm going to be afraid to go in and say, since it's likely to be choppy, I'm not going to do anything. No, we go into the morning saying, this is what I want to get away with trading FOMC morning. So far, so good. Everything in here just looks nice. Everything after here just looks like it's almost like it's staying at this candle open, right? Almost like that. It's just staying right there.
Is it that one or the candle 3 minutes before it?
I know what you're trying to do.
No, hear me out. Hear me out. I've opened up what I was talking about before to look back at what I put down. So I'm only asking that and the lucky number 6.
Lucky number 6 and 12. I know what you're doing.
No. I'm saying, is it the candle 3 minutes before that and the lucky number 6?
Nah.
Okay. What's up? Now I can exit out. That's all I wanted. There we go.
What's the lucky number 6? You tell me, I gotta figure it out. What you know over there?
No, I don't know anything. It's just remember when Sniper used to be here and then they would have their conversations in the live call. Just something they said that I was basing it off, right? Not like nothing special for me.
Oh, okay. You have to teach me.
Kish said it's not it, so I don't mind talking to you about it. But let me confirm with him first.
Kish.
Hey.
Sometimes back, the H1 M5 stuff for the 2-bar, especially with the H1 for direction. How often does it influence you? Because sometimes I do not like when there's a conflict, right? Because I know that works very well, So how do you in a way like separate when you have conflicting stuff, if you get my point?
There is no real way permanently. I see you, Mohan. Permanently remove conflict in price action. You have to pretty much accept the logic that says, hey, listen, I know the rules that I use to keep me in line and keep me in the market. If the market prints anything that violates my rule, I need to do something. Not the market needs to do something, I need to do something. So if you have a buy and a sell signal same place, leave it alone. Don't try to force which one is better. Unless you have confluence. It never ends well. Never ends well, in my opinion.
Okay, thank you. And if I continue, if of course, if you do not mind. So because the next question about that is, why is it that for example, you've not really maybe expatiated more about why that works? Because I follow the indicator and I don't think about it, but sometimes I get caught up because I separate things, because I'm mechanical, as you know. But sometimes I'm always lost in because I do not understand the why about it. And so sometimes it throws me off, especially when I'm on other stuff I'm not familiar with. So it's like, do I just continue and accept it like that's what is working and forget about the why? Or just, of course, it's not to be honest, it's not the things I prioritize because, I have other things that are working more, but I know it works massively. And I'm like, why leave money on the table, right? So if you get the question.
I get the question. My thing would be, if I'm in that place where everything feels fine and nice, and then I have moments where it does not work. I'm a numbers guy. So I want to look at what percentage of, these moments when it doesn't work is in my favor, or, which ones are tradable. Because if I take a trade with a mechanical logic 3 times every day of the week for 6 months, and I realize that north of 70% of the times I'm winning, I don't care. I don't want to implement or change anything. The odds are in my favor.
Okay, then sorry, the last one.
So then try to change something around your risk. Let's see it. So maybe something like, if you're an RR person and you're always trading 5R and you're winning 70% of the time, then you really need to change nothing, because again, the numbers are in your favor. If you realize that most times on your 5R trades, it's going 3, 4R before reversing, then just change it to 3R. 3R at 70% is still remarkably good.
Okay.
Look at the numbers. Do that Excel thing. We just journal all the trades. Look how many times you win versus how many times you lose, and see if the odds are in your favor. If the odds are in your favor, then you're good.
The odds are the odds are very good. I can't lie.
Yeah.
Okay, then the last question would be, and if you do not mind, because it's showing up here and I've been a little confused by it, because I know some weeks back I asked you if we had like this 1, 2, 3, and you suggested that I should always wait for the mid one most times. I am changing that. I prefer it. It makes my life easy. But the question I have now is, sometimes I get tripped up. So I know that if we have, let's say we're starting from here, and we have the second one that closed it. So we have that bearish expansion. Once we stopped here, that was the end of it. Now for the bullish one, because this candle, this one closed above this. And my confusion always is, if I start from here and it ends here, until this candle printed, I didn't know this expansion downwards was ending. Do I include these two as an expansion, or do I just say that, okay, the expansion stopped there, this was just a normal candle, we started again a bearish expansion here, and so I'm waiting here to buy this? I'm always tripped up about, okay, because of course most of my stuff are timed, I'm mechanical, so I have a starting point, and I'm always sometimes don't know, okay, if I'm starting here, end of the expansion here, is this just a normal candle and then we started again here? Or should I include this in the bullish expansion? If sorry for the crazy annotations, but if you get my question.
So if for any reason you see a bullish expansion and the bearish expansion print, mark the key levels. Don't try to guess which one is going to play out. Just mark the key levels. When you start with marking the key levels, then where are we closing? What are we doing at the levels? Always let that guide you instead of you need to see the fractal play out. Needing to see the fractal play out most times is going to have you doing stuff that you shouldn't be doing. You don't want to wait until after to say, why did I do this? This makes no sense in hindsight. We read it left to right. You have to keep reading it left to right.
Yes, but sorry if I get this. Like, so let's assume I'm starting here. Let's just assume on this. And I'm really sorry, just want to get it. So I start here, we close above. Oh, sorry, below this. So we're expanding lower. We stopped expanding on this candle. All right, we're expanding higher because we have this. Once again, we stopped here. What I'm trying to say is that, is this candle here, is this the end of the expansion and the start of a bullish one? Yeah. Or
no,
is
wait. No, you can't do that.
Okay.
If we expand and the market stops going down and it's going higher now, if we haven't broken that expansion point, it's just a retracement. Right?
So until we break this, we are not expanding. The bullish expansion is not started.
The expansion, we're retracing.
Okay.
Isn't that right?
Yeah. Okay.
The market
Yes.
drops,
It's right. Yeah.
If it drops down and it pulls back and it does not take this high, we haven't. We're still inside that expansion.
Oh, so if I'm starting here and I have this, I do nothing until we either close below this or above this. Everything, every green stuff, every green series that is expanding is not an expansion. It has nothing. So until we break, so if we break above here, then I start to look for the bullish expansions up, is what you're saying, just to get it.
Yeah. We don't expand inside a range.
Don't expand inside that range.
Think about it like that. We don't expand inside a range, or not inside the current range at least. Anytime it's expanding, it's to get outside of the range.
Okay. All right, then, sorry. In that case, so, but we've had instances, for example, just one trying to find something on the chat, but it doesn't, okay, I do not see. So, okay, so for instance, because we have, okay, no, I answered my question. Okay.
As a mechanical trader, you have to let the numbers be in your favor and not perfection. That's going to get you messed up because you're going to take something that's mechanical with an edge and try to push that edge until it no longer becomes an edge. You don't want that. You don't want that.
Okay. And I would leave this now. Okay, thank you so much.
Mert, we enjoy your questions. Like, no need to feel like you're
don't feel like you're not getting anywhere or anything like that. Just look at it through. I know you're mechanical. I've seen your setups. So don't change that. Just let like compound interest. Just let time do the rest. Just need to keep doing what you're doing until time aligns.
Thank you.
No change in anything.
Yeah, the expansion stuff really helps with some problems, and we would. But thank you so much, Kish.
No worries. So FOMC today has been nothing short of FOMC. I still hold that this is the draw on liquidity for the day.
Each one question, please.
Sure.
You said to me I spoke. Sorry for my English first. You spoke to me. I asked about the 4-hour BC, and you said it will not get there. What idea did you held you about away from this idea to get to that BC?
So generally,
because it did.
Yeah, I know it did. I saw. I don't trust that it's done, but I saw what it did. I'm like, okay, this is. I don't know if it's one of those days where the drawn liquidity is higher, and we spend all morning just dragging folks lower, and then the news comes, and it's just like a big whiplash. I don't know if that's what's going on, but as far as I'm concerned, I'm going to swing a buy today. I'm going to swing a buy. So if the market crashes, know that I took a loss.
Hey,
know that I took a loss.
Hey, Kish, just a question on the logic here. If you're done with that one.
Huh?
Just a quick question here on like the entry fractal, if you got a second. So like once we got confirmation here, because like this is the lesson of the day, I feel like once we got confirmation here above this barricade, and we already have the structure of the mall, is this buy here? Is it better to wait for the CSD, or is it just anywhere in here? Limit, stop down here.
I'm limit. Well, I would say limit because I'm entering the moment it hits there.
Yeah. Okay.
Yeah. Kind of like this. All right. So let's look at it like this. If we know that this is the range, okay, and we know that this here should initiate the expansion to leave this range, but we're bullish, so we want to see it go through the high, right? So far, let's get this off. Let's take this off. The market ran lower, and it just swept here. How would you read what happens inside here, or what's happening inside there? Realistically, anybody can answer.
I mean, I would say like I want to examine because I'm considering this a stop hunt leg outside the range. So if I'm considering it a stop hunt leg outside the range, I need to evaluate like the pieces of information that were given to me in that stop hunt leg. So for me, it would be, I mean, obviously there's 3 FEGs. The first one is going to give me my like best confirmation. So if we fill that here, then we've already retraced and created an order block before it. So then it would look something like push back to the order block for a limit, then push higher.
Okay. Solid. Anybody disagrees?
No.
Anybody?
Only thing I might add is EQ of the range because that whole thing's efficient.
Nice. Anything else? Don't be shy. With everything that we've been talking about, just look at this and see what you understand from it. Lovely R3, let me just point it out for pointing out that the range is efficient. So watching that EQ we trade towards it is going to be super important. Range high still intact. I still want to see what they do there.
Are you still considering that like narrative though, Kish? Like even as of right now, with we've run the low, you now have to reset that narrative, correct?
Why?
So I guess like where my head's at is you got your confirmation of like the bullish expansion here, or like the fact that the barricade has been closed to some degree. But you're not considering this a breakdown of the barricade. You're saying that the barricade is still live, and I just need an additional confirmation that security has shown back up and they're squeezing everyone out.
Okay. Instinctively, I feel like there's an underlying misunderstanding in that.
Okay. Please explain.
The barricades that we're looking at the moment, based on your explanation, are all inside here. That does not mean that that's the only thing that can print. That's why I'm saying pull this range out in time. Pull that out and use this. Use the barricade plus your key levels now. Failed expansion here. Right here, see? No more closing below that. So where's your barricade? Right there, right?
So when we do get, just for clarification, when we do get these candles like at the low of a move or at the high of a move, when there isn't the two expansionary candles, just jump to the like closest one in that leg of price.
Remember, the barricade is a reversal fractal. For lack of a better, it's a reversal fractal. Reversal fractals that prints where reversals should form should be stronger.
But I guess like what I'm getting at is like, so this is the barricade here because stop hunt leg, this is meaningless. Okay, like there's failed expansion, so I get that. But if I'm looking for a barricade in this stop hunt leg, that's it. And then just apply the same logic of, okay, close above, now retrace to the barricade. That means this down candle that's printed is our OB. Closed above that OB, buy below the open of the next candle.
Simple.
Yeah.
That's what I'm expecting you to see here. So no, that's what we're watching.
So wait, what am I misunderstanding in thinking that the barricade was the candle before that?
Which one?
That one.
Why that one? Is that the last one that closed below previous down close candle?
No, because that was the first one in the expansion that closed below. Am I confusing the barricade and midnight thingy stuff?
Yes, you're blending two different models.
Yeah. I got them mixed up. Sorry, still new. Let me go back into them.
No worries, no worries, no worries. These things are supposed to happen. And it's better when they happen in real time. So
if narrative here though, like I just like want to walk this through and like I feel like this is helpful for everyone listening. But like if that's the barricade, we close above, then we retrace to our key level, create the order block, which is here, close above that. Technically, when we close above that, I'm buying below the open of this candle here.
Right.
So I can get filled somewhere in here. But there's a lot of narrative below me here. There's a lot of room for retracement below me. Is that why I just like look at my key level and my failure swings that are below me with a confirmed narrative?
No. Your entry is fine. The narrative below you just tells you how to frame a stop loss. So that then tells you how to frame your risk.
Okay.
Oh.
See?
Wait, the barricades failed expansion, innit?
Yes.
Okay.
See? Everything comes together. But this barricade is doing the same thing as the previous mall level, where we're not getting lows above it. So either we're being held or something is going on.
But like, would I need to take this into the point of view of like rejection block, high probability failure swing? So if we were going to retrace with a confirmed narrative, something like this would make sense. And I can frame my risk once we take liquidity below fair value, change in state.
Simple.
Okay.
Simple. It also tells you that if your entry is very far away from a level that you can frame narrative around, cut the risk if you're going to enter immediately. Make sense?
Yeah, I mean, this video has so many nuggets in it, it'll have to be reviewed. And I'm still trying to get my process around that clear. And there's enough examples in this video that all of us can go back and review to refine the process that needs to take place here and then how to frame risk. But no, this has been fantastic. Thank you, Kish.
Yep. And I like the fact that it's happening on a day where we understand why the market is moving slow. So you never have to lose confidence and say, you know, I saw this work before, but then FOMC day was just a mess. No, FOMC days are supposed to be like this. They're generally like this: slow, messy, choppy, confined in a range, normal, not hurting anybody.
So get yours and get out.
Yeah, get yours and get out, or you cut risk and let the trade stay. Don't try to micromanage it. Enter and walk away. And knowing that, okay, if it actually stops me out, I'm losing something I'm willing to lose. So you never have to you know, you're 10 meters away from your phone, but you're trying to see the screen. We're not going back to that. But yeah, it's 10:40. There's not anything impending on my to-do list right now. So I can stick around today and watch price action a little bit more. If you have questions, again, feel free to
Where
send them in.
is your draw again?
Huh?
Where is your draw?
My door? Oh, my daughter?
No, your draw liquidity.
Higher. This high. 932 I. That's the first thing I want to see the market trade through. But it's just jumping around, so
okay.
I have enough conviction to just sit and wait and find out if I'm wrong or not. And
okay.
I don't mind doing that with you here. This is just slow and messy and messy and messy.
See, with the barricade, we only talk about this level, but this level is also equally important, isn't it?
Which one?
So we talk about here with the barricade, but this one's also equally important if I'm remembering from what you used to teach regarding this.
You don't have to put too much importance on that. You just need to understand what it means. That's all. Yeah. In this narrative, since we already put that down candle above, you want this down candle here to be everything. There's no FEGs inside here.
Yeah.
You're not going to use this FEG either because it's not the first one or the second one. So everything here, just allow this to be slow and messy. Find your level that you need to see the market get above, and you wait.
Yeah. Cool.
Yeah, but it's just.
Let me say thank you to David for your questions and making something clearer. Amen.
Amen.
Yeah, bro. Just trying to like for me, it just Kish is gifted at like explaining processes, but like I feel like where we struggle at times is understanding that process like deeply enough in ourselves so we can replicate it and know the like different nuances that he's talking about. And like when we have a morning like today and we get enough examples of this, he's telling you or he's telling us the nuance that needs to be triggered and then what should happen next. And like, I mean, it's brilliant when you see him literally call it beforehand and then everything lines up. But like where we should all be reaching for is understanding that like process for ourselves. So like the details and nuance of when it goes right and when it goes wrong becomes clear to us.
Amen to that, because it's the nuances that kill.
That's what growth looks like.
Yep.
That right there is exactly what growth looks like. So as I was saying, so I had a position on, it just stopped me right there. This now does not feel like we're going to have any type of movement ahead of like noon, because FOMC days generally does something like this. It's either slow and messy or it pulls you in a direction and then right at the news, then we go bonkers. I am stalking a buy all day today. All day today because I want a majestic buy. I'm not going to stick around until like 2 o'clock though, for sure. After maybe, but not up to 2 o'clock.
And Kish, like, let me just ask, is this, and this is where like, I think like you dive a little bit into your magic realm here, but like, are you even referencing your H1 stuff here? Or are you just going to continue to read this current delivery and not even care like what it reaches into?
So I think we have enough solid analysis from the H1 chart to know that.
Because I'm seeing, and the only reason I want to say is like, okay, well, if this is our expansion that took us above the bag here, I've got retracement objective, which like we can close through, and then it's like ILFED, CSD into there for the bag. And then to me, when I'm looking at H1, that's logically where I would like that to take place. But then there's times when I'm watching like the lower time frame and the barricade stuff and our understanding of deliveries and time that tell me, okay, I might not have to wait till like we get down there. It's going to print signatures where I can get 20 points break even partial that could create that push.
True.
Am I thinking about that the wrong way though? Like
no, you're 100% correct. 100% correct. I love what you did there. For me, I'll tell you exactly what I'm looking at right now. This is my range low, without a doubt.
Yep.
This delivery just ran that low. We had it run before, but we're getting that run again.
Efficient range as well though. Like that last rejection, that one like was passing into an efficient range.
Right. The only thing I care about at this point is if I can get the market to trade above the levels I know mean bullishness, because I'm bullish. If it keeps doing this, I'm not going to force the logic. I'll probably look at time in a couple of minutes. But outside of that, it's a waiting game. And in days like this, again, the mornings of FOMC, you have to know that that is something that happens.
And this is where like you just repeat our process. And that's the whole point that like you're getting at here is like, okay, if we can understand the nuances of like this process that's taking place. Well, if this is our range that was efficient, we rejected 50%. Well, this is the expansion now into the stop hunt, like below that. So between barricade and FEG fill here, just repeat that same process here.
Right. You never have to rush into it. You never have to wonder. Just mark your levels and wait. If anything looks like the risk on it is too great for your personal liking, you just sit back for a little bit.
Beautiful. Thank you.
That's what I'm saying.
Here's a question for you. In how many minutes will you be looking at time?
Okay.
Starting now.
Let me check my good book. About 5 minutes exact.
What the fuck? Sorry.
R3, there are children on this chat, please.
So 5 minutes exact. I want to see everything that I know to be bullish to print.
Let me just
5 minutes from now.
Let me just put a marker on my screen.
Yeah, something like this. Something like this.
I've heard you mention this time so many times, you know, this particular 52, you know.
I would need this to get traded to.
All the rotations.
And Kish, like this is just once again, barricade, obviously FEG, like if those happen simultaneously, fantastic. But if this is our barricade, our key level is here. So it's close the barricade, retrace to key level, watch it print our order block there, get in, mile marker here, bag above that.
So normally I'd be clapping my hands off for you. But for right now, I need this old range to validate this. Okay? I want this to print like it was never there. So the levels from before should give way more importance than whatever I'm down here. But this delivery first needs to show me that. So above here, before here, we're going to find the level from over here. Nice, like that one. And then they behave.
So you wouldn't even expect them, like I guess in this environment, you're thinking reclaimed ideas instead of thinking barricade, key level here. You're thinking we might not even get that key level. I need to be referencing the old key levels that we're passing through.
Yes. And the reason for that is
efficient.
Everything this needed to go higher was printed there. At this point in time, we had everything we needed to go higher. But it failed. See? It failed. And it stayed inside the range. Above everything else, it stayed inside the range. This in my opinion, humble opinion, should not happen. This is not necessary. So now it should be like this never happened, and this remains important.
And this is also when, because like we're going back into an efficient range and we're using reclaimed ideas, this is when displacement through an efficient range can create our like entry models pretty much.
Well, I would want to see candles that show no interest in going low, just big like this. And if it opens and it wicks lower, it's just going back to something from over here.
Okay.
Hi, how you been? And then that's gone.
Okay.
Everything I want from this price is up here.
But
this,
so are you trying to see if we can? You don't care about the barricade, but you're basically trying to see if we can get back through the brick wall.
Yes.
He's saying because of the environment that we're in, the old barricade will take precedence over the new barricade. Is that right?
Yes. So thinking about retracements here, no, I don't want retracements here, because retracements here is giving importance to all of this that I already consider irrelevant. Everything that we should reference is over there. We close below this here, this push came from over here. Everything before this drop is way more important than what happened after this drop. So if I was a
gambling man.
No, not that. Here. I would argue, let's say,
the ICT gun to my head.
None of this is relevant to what I want to see.
Look at the message I just sent you before you put that box on, please.
Where'd you send it?
On the Zoom call, direct.
Oh.
Kennedy, I want.
Close, but not exact.
Okay. Getting close. You know, I hate you when you say to pretend I never heard that.
So
you're close to get me up at night.
I am going to be bold and say that nothing before here is important. I know it's not as pretty as it was before. I'll add another one. I'll scrunch up the chart a little bit and then add a one that's easier on the eyes. So everything before here to me is irrelevant. So my focus is going to the open of that candle and the levels on the left.
Does this have anything to do with a video towards the end of what last year, where you go through something very quickly?
I don't recall, fortunately.
When you first started, like, forget it, man. I don't even know how I'm gonna word it.
Has to do with everything.
Dave, stop. You're not wrong.
But yeah, I'm being bold and saying that nothing before that is relevant. And in a couple of minutes, we'll find out. See, we just traded below it. If we're bullish, it's gone. This is how I decide if I'm going to trade for the rest of the day before the news. If this does not run away from here, I'm not going to trade again. Runaway. Down candle highs. I think it'd be a little bit faster, because then if it's not doing that immediately, then you open the door for too many things. And that confirms that we're not moving. So this is probably going to chop around for the rest of the morning. And that concludes me trying to trade for the rest of the day. At FOMC, I'll come back and look. But as of right now, nothing here entertains me.
So you saying we jump on a call for FOMC? Wait there. Who's that I just seen that? Yo.
Sniper?
Where have you been, bruv? Sorry. Does that mean you're coming back at FOMC, Kish? Sorry, that really shocked me.
It depends. Around about 30 minutes before FOMC, I'm gonna go grab my daughter from school. So if I'm back in time, then I'm all for it.
All right, cool.
Cool.
Yep.
All right. Today's been one of those days where it's a mixture of beautiful deliveries and delayed choppy stuff stuck inside the ranges. Rules are always the best. But again, anything that wants to trade below that line, no bueno. So for me, this concludes my morning. I don't know what it's doing now. I don't know what it should do. Once it's below here, I have no read on it. This does not speak to conditions that are easy to trade, for me at least. Somebody might be looking to short this and then go down. I don't know. But for me and what I want, this is not hyperability. So, should be getting close to the end of my fasting window. I'm going to go do some light exercises and get ready for that.
Thank you for being with us.
My pleasure, guys. Do enjoy the rest of your morning and see you.
Wonderful. Thank you.
Mutual
Knowledge
respect.
cannot be erased.
Lots of love and mutual respect.
Amen.
Tip, 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 tip.